Good morning, ladies and gentlemen. My name is Daniel Lamchon. I am the coverage executive for the Indian Ocean and Lusophone region in Africa at TDB, and the deputy CEO of Eastern and Southern African Trade Advisors Limited, the fund manager of TDB Group's trade finance subsidiary. It is an honor to be the moderator for this session on leveraging technology to improve trade finance in emerging markets. The pandemic emerged during a dynamic and transformative period for trade finance globally. With the introduction of new platforms and digitization, including blockchain and cryptocurrencies, the trade finance sector is well positioned to increase economic activity and solidify a more resilient banking sector with three key trends. The first is the opportunity for financial institutions and technology providers to ensure an increase in liquidity, particularly the SMEs in developing countries. Second is intense movement towards innovative technologies and digitization to drive efficiencies. And third is product innovation resulting from the emergence of digitization, large data analysis to drive lending and business models for banks, blockchain, etc. This panel will begin by exploring the effect of global pandemics on trade finance, and will interrogate and discuss the impact of these emerging technologies on improving trade finance, focusing on lessons learned during the last 2 years. Finally, the session will highlight how strengthening trade finance during global pandemics could result in risk mitigation. Before opening the panel for discussion, I will invite the panelists to introduce themselves. Let's start with the ladies. Ms. Jallow, would you like to briefly introduce yourself, please?
Yes, good morning or good afternoon, depending on where you are. Thank you, Lam. Thank you all for having me and for your participation. So I'm Jallow. I'm the Senior FinTech Advisor for EcoBank. EcoBank being one of the biggest banks in Africa with presence in 33 countries and more than 25 million customers. My role within the bank is to facilitate partnerships between EcoBank and fintechs in general. Thank you.
Thank you, Ms. Jallow. Ms. Veronica Namajembe, over to you.
Good afternoon, Daniel, and good afternoon, members. I'm Veronica Gladys Namagembe. I'm the Managing Director of Pride Microfinance. Pride is 100% owned by the government of Uganda. I also sit on the board of Uganda Bankers Association. Pride has over 600,000 customers, and we are spread in 43 locations in Uganda. We serve mainly the base of the pyramid. Thank you so much.
Thank you, Ms. Veronica. Mr. Michael Aruri, would you like to say a few words, please?
Thank you, Mr. Lamchun, and welcome to everyone joining us. I'm Michael Aruri. I serve as the Deputy CEO of Trade and Development Bank, and it's a pleasure to join again on this panel and on this conference that we've been running jointly with our partners at EIB for the last few years. Welcome again to my fellow esteemed panelists, and looking forward to a vibrant and productive discussion. Thank you.
Thank you, Michael. The first discussion point is the perceived impact of global pandemics on trade and expected implications on development. The current environment has led to distress of various businesses and disruption to international trade resulting from closure of borders, impact on trade, amongst others. Mr. Michael Aruri and Ms. Jallow, could you please describe your experiences and perception on the impact of global pandemics on trade, and how do you believe these impacts would affect economic development?
Sure, happy to start off. I think as we've all seen that the pandemic had a significant negative impact on trade and trade finance, and if anything expanded the gap in trade finance. We saw that there was a sort of a simultaneous supply and demand shock that really rippled through sort of all sectors of the economy concurrently. All right, so supply chains were disrupted, demand fell down to zero in some sectors. Export markets were broken, as we had ports being closed, airports being closed, and of course local markets as well were significantly affected with curfews, movement restrictions, etc. So really, all sectors of economies were hard hit, especially SMEs, which is are really the backbone of the economies. But I think in keeping in the theme of the conference in terms of resilience and recovery, perhaps we'll spend more time looking at, I think, areas that not only were affected by the pandemic, but more importantly, how these we think can be reshaped to enable growth and development post-pandemic. So a couple of areas that I focus on. The first is value chains, right? I think the pandemic showed the risk of global value chains and really the sort of hub and spoke model where a product moves through multiple regions before final assembly. According to the IFC, over 2/3 of world trade goes through such global value chains. And as we saw in the pandemic, when countries or regions close themselves off from the rest of the world, essentially those value chains collapse, right? So, you don't have raw materials being able to move or other key suppliers or components, again, unable to move to the next phase in the production process. And as we've seen, even as some regions or markets open up, that even if your market opens up, you may still not be able to restart production if one of your key sourcing markets, right, is still shut down or still closed off. So I think this then creates an opportunity for new local and regional value chains to form, right? An opportunity for new, perhaps smaller hubs of expertise, particularly around manufacturing, around more value add, and I think particularly for Africa, I think this creates a good opportunity for us, and I think it also provides further momentum as we have the AFCFTA moving into the hard work of implementation now, right? So I think this is really providing more impetus to explore ways to boost inter-African trade. I think the other key area that we're seeing is in terms of infrastructure, right? Particularly trade-enabling infrastructure. So even coming into the pandemic, a lot of sovereign budgets were quite stretched, and of course through the pandemic, our sovereigns have had to redirect what little available resources they have to supporting the social sector, addressing the health crisis, etc. Right, but the long-term infrastructure needs, of course, remain: power, housing, education, etc. But now these sovereigns have even lower fiscal space to invest in these sectors. So I think this creates increased opportunities for private investment to come in, for example, through PPPs. This provide investment opportunities that we can channel local savings into. I think it also creates opportunities to attract foreign institutional investors and foreign capital who are looking for improved yield, particularly developed market investors where the quantitative easing that they've experienced has left them with interest rates sort of close to zero. So I think looking at the opportunity to involve private capital in infrastructure will be another area that will support development coming out of the pandemic. Thank you.
Yeah, thank you very much, Michael, for sharing your views. Ms. Jallow, can I invite you to share your views as well?
Yes, thank you very much. So indeed, the pandemic has unfortunately very bad effect on various aspects and various industries. But I want to speak about the positive effect, if we can speak that way, around how we've been able as Africans to show our resilience, but also our capacity to innovate and to find solutions by using technology to go over the crisis. Because I'm in the fintech or financial space and technology space, I can speak to that. I've been very pleased, or we've been very pleased to see, because of the lockdown, because many people could not move, because businesses owners had to close their shops. We saw the rise of companies that came with solutions for them to be able to continue doing business despite the issues that they were facing, specifically on the mobility. So last year, we've been working with companies as EcoBank. We've been working with companies that were mainly on the payment space, but saw the opportunity and provided platform and solutions for SMEs to be able, for example, to have online presence. So keep the communication and the trade happening with their customers, even if they could not move or even if they could not meet physically. And that was a very interesting experience because it helped many businesses, keep being alive. So what happened actually is that last year during the lockdown, we organized a conference, with an online conference, of course, with some of our partners, just to listen to SMEs on the issues that they were facing and how we could help as a bank. And the feedback was very clear for them. They wanted to keep their business running despite the issues that they were facing. And that's what we got as feedback. And when we start looking at the environment where we are, we realized that there were some companies that were providing those solutions, and we've been able to help businesses. So, and it's not just us. I'm really talking about on the general environment of startups and innovators. The young people and companies have been very innovative and very creative on finding ways to help businesses keep running despite the issues that they were facing. And that was quite interesting to see how African populations were using technology to continue the trade that they were doing. We also saw the central banks and the regulators enabling all that journey by changing the regulation sometimes and the rules to enable more digital transactions. And that was a very good move. What happened actually is that even after the lockdown, they kept those rules because they saw that it had a very, very positive impact. So I'm not specifically talking at the macro level, but at the micro level within countries, we've been very pleased to see companies coming with innovative solutions to help businesses keep being alive despite the issues that they were facing, and that was a very positive point.
Yeah, indeed. Thank you very much for your comments and observations, Ms. Jallow. I would like to welcome Ms. Sandra Uwera, who is the Chief Executive Officer of COMESA Business Council. And now let's talk about anchoring trade finance in the digital age. Trade finance is an asset class which carries a certain amount of risks. For example, document falsification, money laundering, etc. Many believe that this area would strongly benefit from digitization, such as less interference, manipulation, improvement in processes, and increased efficiencies. Ms. Sandra Uwera and Ms. Veronica Namajembe, what are your thoughts and experiences regarding digitization, and what are the challenges you foresee?
Okay. Thank you, Lam. As CBC, we recognize that trade finance is of importance mainly because of the availability of trade finance facilities and how essential they are for a healthy trading system. So while trade finance is indeed increasingly affected, enhanced, and transformed by the era of digitalization. Significant challenges continue to stand in the way of a wide uptake and hence major benefits for SMEs in accessing trade finance. These include challenges that are related to technology solutions, as well as the supply and demand sides of trade finance. According to research by the International Chamber of Commerce in 2018, we noted that banks remain hesitant to embracing digitalization as a solution to trade finance issues. As a result, we've seen traditional trade finance players such as banks having limited expectations concerning the impact of technology on trade finance. At the time of the study, only 15% of more than 250 banks around the globe viewed digitalization as a game changer in transforming trade finance. So that was actually very interesting. But today, trade finance has been essential for domestic and cross-border trade flows. Currently, these transactions are responsible for a significant proportion of global trade. About 80 to 90% of global trade relies on some type of trade finance. In essence, the way we understand it as a private sector, every time goods or services are exchanged and sold across the border, there's some sort of trade finance involved. More recently, service providers, financial institutions, corporate clients are seeking to streamline their processes to reduce transaction time and cost, as well as mitigate fraud risk, by replacing the flow of paper with digital data flows and leveraging various technologies. I know Michael was speaking about this in previous sessions. Digitalization is driving down the cost of trade finance transactions. It's also increasing transparency for all parties involved. And as a result, it has reduced credit risk, it has enhanced cash flow forecasting, and it has provided better allocation of working capital. And by providing a global electronic counterpart, trade finance market has become more digital. And this is very key, it's very important for the broader market, which includes the micro, small, and the small and medium enterprises, who we as a CBC service quite a bit. So we have noted, of course, that the shift to digital has been very, very slow. The reason for this adaptation, it's evident, right? So trade finance transactions involve multiple parties. We've seen trading parties, financial institutions, credit insurers, shipping companies, customs, and other service providers, all located, across various markets and jurisdictions, having a requirement to adopt digital trade finance solutions. But this requires technical skills capacity, political will, a substantive involvement, and an evolution in business operation dynamics. There needs to be transparency between interagencies and a strong collaboration and interoperability within industry supply chains. So with the new introduction of blockchains, not so new now, we can now easily link digital processes across various parties involved in trade. And we have seen that the pace of innovation in this area has been vastly accelerated as a result of the negative impact of the COVID-19 pandemic. I'd just like to highlight some of the key aspects that are the key areas of digitization in trade finance that would be very, very important for businesses and for SMEs. We've seen that digitization provides a significant scope in improving operational efficiency, as well as the quality of risk assessments, credit risk assessments. Specifically, the centralization of KYC databases is a promising solution for addressing compliance issues at a cost-effective rate. And these centralized databases would provide the same information about a client to multiple finance providers. And this is very, very significant for SMEs who use digital wallets to carry out the transactions and are looking to access credit or loan facilities from a bank. Secondly, e-documentation is increasingly facilitating the digitization of trade processes. So far, we've seen paper-based documentation constituting the backbone of the traditional trade finance instruments, such as LCs, and these are triggering, inducing payment obligations by the banks involved. So our research shows, as the CBC shows, that SMEs benefit from streamlining and automation of trade documents and cross-border processes. Then digitization on the supply chain processes is also very, very important. These include digitization of internal systems so that trade finance applicants no longer need to prepare paper application forms that have to be manually signed. As such, this technology can reduce costs and inefficiencies with the verification and the compliance of these external documents. We have seen that blockchain technology, artificial intelligence, the Internet of Things, and machine learning hold a very strong promise in solving some of these banking problems and possibly even reshaping trade financing. I also like to bring to your attention that in order to achieve a broad uptake of digital solutions in trade finance, there's need to be an acceptance and an adaptation from the demand side. SMEs not only need technical skills for digitalization of their own business operations, but they also need to also improve the internal compliance processes, and they also have to make a change in their investments and organizational formats, which may be costly and time-consuming for them as SMEs. This is why we've seen that there's a limited adaptation of technologies on the demand side of firms, and it has also affected the key operational requirements such as e-documentation and filing. But the COVID-19 pandemic has exposed the importance of digitization and has also spurred SMEs to accelerate the adoption of digital tools and technologies. We have seen that a lot of the businesses are trying to bridge the digital gaps, especially when they're trying to integrate into larger companies within our regional and global markets. Lastly, we've also seen that a lot of companies and industries have innovated their models, and they're opening a lot of online platforms and portals that are connecting finance providers, buyers and sellers in order to provide more innovative trade finance solutions, as well as LCs and supply chain finance solutions. But most of these platforms are backed by or driven by financial institutions, and there's often a lot of cooperation and technology. So as a recommendation, I'd just like to recommend that SMEs stand to gain a lot from these recent developments, and they're also contributing to mitigating structural changes challenges that have been hampering access to trade finance. It has also helped to improve process efficiency and quality. It has helped SMEs to create new products and approaches also to the banks and to trade finance. And it has also helped, digitization has also helped SMEs tailor, better solutions that are responding to the market. So it is important that this process is continuously nurtured and facilitated to grow more robust across our economies. So there needs to be a harmonization of business processes, regulatory frameworks, systems, and operations across the public and the private sector. And lastly, there's a really strong requirement to strengthen digital technical skills for SMEs as they seek to grow into new markets. And this can be through digital retail payment platforms that we are pushing forward as a CBC and other innovative models that can help SMEs to expand in terms of digital cross-border transactions and businesses within our regional and global markets. Thank you, Lam.
Yeah, thank you very much, Ms. Uwera. Ms. Nabajambe, would you like to share your thoughts and experiences regarding digitization and what are the challenges you foresee? Okay.
Without repeating what Sandra has said, I want to look at it from the shoes of the customers. These micro, small, and medium exporters and importers. When you look at the risks actually they face, the long distances, the language barriers, the different laws, many of them are not even educated, but they can easily pick up with the digitalization. What we see, the value that digitalization, especially the one that we use, the mobile phone banking on our customers, we as an entity, we've got a lot of benefits, the efficiency, the agility, the quick turnaround time, resource management, and the data mining that we use to get customer insights when we are developing new products. But also on the side of the customers, there is a lot of convenience and time saving and security. Without further ado, when I look at the challenges that I foresee and what we have gone through as an entity, when you lack a well-defined and articulated strategy, it can be a very, very big challenge. I recall we would see a solution, a digital solution, and we say we are going to go for it. We do the procurement up to the end, and then we see that, by the way, we should have got the integration first before going for this solution. And good enough, EIB was kind enough, gave us a grant to get a digital transformation consultant who has helped us in coming up with a digital transformation roadmap. Another challenge that I foresee is digitalization, and digitization takes time. It's a journey. It takes steps and phases. You can't do it all at once. You have to experiment as you're experiencing the journey itself. It requires huge investment, both in the short, medium, and the long term. Sometimes you may take long to procure. You get this solution, and guess what? The industry has moved on. So you have to reinvest afresh. Dedicated IT staff and building this team is very hard, because also your competitors are on a lookout to get those guys that you have trained over the years. And as organizations, if we lack organizational change management, it can really kill brilliant digital ideas. Also, another challenge is to appreciate that customer needs keep on changing. One shoe does not fit all. So you also, as an entity, you need to change with a moving time. Ineffective data management and business processes can be another challenge, especially where you see that departments work in silos. It can really be a challenge. Then digital transformation, or the digital journey, requires a lot of unlearning, learning, and relearning. But of course, we can't forget the cybersecurity aspect and data security, which is very high risky especially for the financial institution. Thank you so much.
Thank you very much, ladies. The last discussion of this session is the emergence importance of blockchain technology in trade finance. Blockchain represents a new opportunity to improve processes and drive efficiency. And this timing couldn't have been better, as our trust in online services has increased during the pandemic. In Africa, blockchain represents another platform for digital empowerment. In a region of fragmented data and complex supply chains, the technology has the power to transform the way businesses share information, track assets, and deliver their services. Mr. Awori and Ms. Jallow, please, could you tell us a bit more about your experiences and thoughts on using blockchain technology in trade finance?
Sure, happy to kick it off again. Thank you for that question. At TDB, we have, I would say, pioneered the use of blockchain in our core trade finance operations. We began in 2019 with a sort of a proof of concept where we executed a transaction worth about $20 million. I said sort of a proof of concept to sort of really understand how we could apply the concept of blockchain to our traditional processes, and what lessons could we learn, where would we need to tweak our processes, etc. And then in 2020, clearly with COVID hitting and those disruptions to trade and value chains that we discussed earlier, particularly around airports being closed, ports being closed, movement restrictions, we really saw the significant impact, the significant benefit to trade finance from blockchain. As Sandra just talked about a little bit earlier, in terms of 80 to 90% of trade being supported by trade finance, and the majority of that trade finance is what we call bank intermediated trade finance, which essentially means that it's supported by a bank issued instrument, typically a letter of credit or a guarantee. And these instruments and these processes are still very paper heavy. Typically, these paper documents, which evidence the ownership of goods, still need to physically move from one party to another in the trade cycle. Mm-hmm. As we talked about with the COVID restrictions, with that paper being unable to move, clearly prevented a lot of trade and trade finance from happening. For us as TDB specifically, we saw in some instances where it typically took about 2 to 3 weeks for these documents to move through that cycle. We saw that time period increase to 6 weeks, 8 weeks, and even more in some cases. So that really led to sort of an increased willingness of clients to discuss blockchain and how to utilize it to support their business with us. And we saw our volumes increase quite significantly. So from that 20 million in 2019, we did about 250 million in 2020. And this year, we're over 300 million so far. Now, when fully realized, blockchain can eliminate the need of that physical paper entirely, right? Because all the parties to the transaction were able to interact with electronic documents. In our case, via what's called a private permissioned blockchain. So only the parties to the trade have access to the blockchain. But in doing so, all the parties have access to the same documents at the same time. From the bank side, we can transact, do our usual process, checking the documents, run compliance checks, etc. Everything that we would do once we receive the physical docs, we could do with the virtual or electronic documents. But importantly, because we aren't waiting for the physical documents to arrive, we've eliminated those weeks that I just talked about before. Now, the reality is we haven't yet achieved the full realization of these benefits. The technology is there to do that, but our regulatory environment in many of our countries has not yet kept up with where the technology is. So to break it down, and our general counsel touched on this earlier in his panel, for parties in trade finance to rely on electronic documents, essentially they need to have the confidence that the law will recognize those electronic documents as being equivalent to paper documents. Now, the reality is, in very few countries is that the case, right? But it doesn't need to be that way. So, for example, the UN put out a model law on electronic transferable records, which they put out in 2017. And this law basically provides a framework that countries can adopt domestically. So countries don't need to start from scratch in terms of determining, their own legal framework, their own legislation, and how to bring about that equivalence between electronic and paper. There's frameworks that are already out there that are available that they can utilize. But to date, only 5 countries globally have adopted domestic legislation based on that law. So clearly there's a lot to do on the legislation side, on the regulatory side, to really facilitate the increased adoption of technology. There is some work to do on the technology side as well, addressing digital islands and digital divide and the like. But I think from our view, the big opportunity is on the regulatory framework side. Now, I am encouraged about where the state of play is and where it's moving to, because of those 5 countries I mentioned, which have adopted legislation based on that UN model law, 4 of those countries adopted that legislation this year in 2021. So clearly, again, there's been an increased reception to the concept of how we can apply technology in a practical way to really address practical problems that clients are facing, businesses are facing, SMEs are facing. So I think it's overall, again, very, very encouraged about the trend that we're moving to. Thank you.
Thank you very much, Michael. Indeed, we hope that the regulatory issue will be resolved quickly so that more countries can enter into the digitization for trade finance. Ms. Jallow, would you like to tell us a bit more about your experiences and thoughts on using blockchain technology in trade finance, please?
Yes, thank you very much. So I think Mr. Auri already touched a little bit on that. When you think about blockchain, there are three major advantages that the technology provides. The first being the security or the trust that the blockchain technology kind of ensure because it's a ledger distribution system that is used. The second one is instantaneity, the fact that the transactions are instant and very fast. And the third one is the fact that you don't need intermediary. It's a direct or peer-to-peer enabling platform. And that's those three elements are things that definitely provide a major advantage to the blockchain technologies. And when I was talking previously about the fact that during the COVID lockdown, SMEs and technology providers and startups have been very resilient and have been able to provide very innovative solutions to allow SMEs to continue trade. And I think that at that time, we also realized that actually blockchain could be a very good instrument to also enable transactions cross-country. Transaction, which is a very, very important thing. The African market is a very, very huge one. Now that we have the African Continental Free Trade Area, is definitely something that we should leverage. And I strongly believe that blockchain can really help us achieve that goal. We actually saw and we keep seeing many service providers, mostly in the financial world, to enable transactions, cross-border payment between countries in the continent. And we strongly believe that the path will continue. So once again, what those companies and those innovators are bringing is the ability for businesses in various countries to work together and do trade together on a very trust manner, very fast and cheap as well. So on our side at EcoBank, we saw blockchain definitely as a very good opportunity. And that's the reason why we partner with either fintechs or even some banks or other financial institutions that are very much developing solutions based on blockchain. And the fact that we have presence in 32 countries with digital solution enabling a payment across those countries is a big advantage that coupled with blockchain platform and blockchain technology that could really help enhance and accelerate quickly the trade trend that we are seeing in Africa. So I strongly believe that the AFTA is a very good opportunity that we should leverage on. And I believe that blockchain could be a very good engine because it enables trust, fast business, and secure payment, which is capital and which is essential if we want to make sure that that initiative will be a successful one, and that that initiative would also enhance the intra-Africa trade as the way the African Union is targeting the goal that they are set to themselves. So I think, unfortunately, as Mr. Ori also said, on the regulation space, we are not there yet, unfortunately, even if some countries are quite advanced, but it's not the case, unfortunately, for all the countries that are under the agreement. So it's something that we need to work on. I believe what they need is just maybe they need help to better understand how it could really help, how it could really be an advantage, both for the countries and for the continent. And on our side, we are actually working with regulators, both in West Africa, but also in East Africa, to make sure that, and to understand what could be the advantages that blockchain could bring, and how we could all, take advantage of that innovation and enhance business within the continent. So yes, that will be basically my contribution for this. Thank you.
Thank you very much, Ms. Jallow. Indeed, I believe that we're all very pleased to see that digitization has increased trade finance across the continent. And of course, there are a few challenges that we need to resolve, but I'm sure that digitization will increase trade flows amongst various jurisdictions in Africa. Dear audience and panelists, we have now reached the end of our session. I would like to thank you for attending to this session. I wish you well and stay safe. Thank you. Bye-bye.